Here's the brutal truth nobody wants to say out loud. Most investment managers aren't on your side the way you think they are. They'll smile, nod, maybe even throw fancy terms at you, but deep down, they're playing a game that often leaves founders out in the cold. That frustration you feel, the endless calls, the meetings that go nowhere, the vague promises, that's not just bad luck. It's a symptom of how this whole system is rigged to protect them, not you. You pour your sweat, your nights, your sanity into building something real. Meanwhile, on the other side, general partners hold cards nobody tells you about. Like how they actually decide which founders get attention, not based on your vision, but on what fits their narrow criteria or how you fit into their portfolio mix. They don't tell you straight up. They obscure it with buzzwords and passive, "we're interested in founders who can scale" nonsense. Meanwhile, if you don't check every invisible box, you're invisible. That's frustrating, infuriating, and honestly unacceptable. And the worst part? They guard their playbooks like state secrets. How they slice their incentives, how they shift risk onto founders, how they can kill your deal quietly if you push too hard. If you're not actively digging, you won't see it until it's too late, like a slow bleed in your startup's lifeblood. You deserve to know this up front. You deserve the power to walk in with your eyes wide open and force them to play fair or walk away. Here's what you need to do. Exact step, no fluff. First, stop treating fundraising like a normal business pitch. It's a negotiation war zone. You must know the exact structure of their incentives. Ask about carry, hurdle rates, fees, demand clarity before you ever show your deck. If they dodge, walk. Your money is not charity, it's a partnership, and you need to control the terms, or you're handing them the keys to your fate. Second, develop a position so strong they can't ignore it. Be the founder who not only has a product, but a vision no one else has, a traction no one else can replicate. And here's the crucial part. Get other founders and investors on your side early. Build that network relentlessly. If you're walking in alone, you're vulnerable. If you arrive backed by people who respect you and will call bullshit when needed, that's power. The old model of solo pitching is dead. Collective leverage is your secret weapon. Third, challenge every assumption they throw at you. When they say, "We only invest in Series A with $5 million ARR," dig deeper. Are they scared of risk, bored, or trapped by their own processes? Find where they bend, where they have pressure, and press there. Their no often hides a "not like this." If you don't push, you settle. Settling means selling out your future. Fourth, remember they want your success only as much as it fills their pockets. Don't confuse alignment with loyalty. Be ready to call out bad terms. Be ready to walk. Be ready to find partners who don't just say yes to you, but work with you from a place of respect and shared outcomes. If your gut screams something's off, don't suppress it. Your instincts are your best defense here. One last thing. The best founders don't beg for funding or approval. They create opportunities where capital chases them. You want that level? Focus on building relentless momentum in your market, lean on your community, and force investment managers to fight for you because you are the prize. Remember, capital exists to serve builders, not the other way around. This isn't about some motivational spiel. It's about survival, power, and owning your startup's future. If you walk into your next meeting blind, frustrated, or hoping for a miracle, you're already losing. Take control. Get strategic. Demand more. Because at the end of the day, these investment managers only have power if you let them. It's time to flip the script and get what you're worth. Subscribe to our YouTube channel and open the featured link to discover more.